right, so in this episode, we're going to take a look at growing a small account and the fastest way of doing it. So let's kind of kick things off and I'll show you what most people do, and then I'll go ahead and show you the better approach to doing it. So when we look at growing a small account, probably the way most people start out with growing a small account is they go ahead and look for scanning a bunch of stocks where the price is like between $5 and like $15. Maybe you look at some volume and then you hit scan and now you've got some results. So you've got a bunch of stocks here, like let's say ACP, and we'll pull that up. So now I've got ACP and you say, hey, you know what? I like this company. I'm going to go ahead and invest in it. And then you're looking for probably movement, something like this, where it had, hey, look at that move. It was a nice move and it popped. And that's kind of what most people are looking for. However, the issue with this is now what's happening is you're putting a lot of your money and capital into small companies that usually are not the quality companies in the stock market, at least. So instead, the better approach is, look, we want better quality, right? I mean, you're looking for stocks to appreciate, you want better quality. Smaller stocks like this, what typically happens is they might shoot up, but then they also pull back very quickly. So they shoot up, but then they pull back to where they were because the normal tendency for them is just to be cheap. So they might skyrocket due to news or some stuff out there, and then all of a sudden they just pull right back to where they were. You could take a look at many of these other companies. Let's look at AXL. And I didn't do any pre-studying of any of these companies. I'm just kind of pulling stuff out of the hat. And here's kind of support. And you might say, you know what, I got into this company. You get into it somewhere here. And then eventually it could actually turn from $7 to $8. And that's a great percentage run. Unfortunately, what happens is now what people do is if your account is, let's just say $5,000 and you're trying to grow it, they'll put in like $4,000 into a stock like this. And yeah, maybe it'll go up and make you some money. Unfortunately, this isn't consistent because in order for you to kind of grow an account, you need your profit equity curve to kind of increase. So as it's increasing, that's what you're looking for, rather than taking a one-shot approach. By doing this, what's happening is you're taking a one-shot approach and you're putting all your money into kind of this one baggie. And then, hey, if it works, great. If it doesn't, oh, well, you know, I took a shot. And that might be fine at the beginning, but what's going to happen is you might be taking a handful of shots. If you're doing a few of these, you might want to spread your capital into maybe 10 or 20 positions. And then maybe one of these will skyrocket. And that could be a smarter approach to doing something like this. Now, what I would recommend is actually looking and spending and investing a little more time into your education and learn to trade options, because when it comes to trading options, you're actually able to risk less capital and buy good quality companies or invest and trade higher grade quality companies. And it's a lot better off than dealing with kind of the cheap or the garbage end. And then you're actually able to risk less to possibly make more as long as you learn and understand how options trading work. Now, if you're brand new to option trading, check out tradingwebinars.co. There's a lot to learn when it comes to option trading, and there's a lot of free good videos there on our website, which just has a lot of webinars on there. So it's absolutely free. Check it out. Highly encourage you, if you're brand new to trading options, to go ahead and start with that. So the point being here is that now what we can do is actually go into trading something like a Microsoft. And we don't need to risk a ton of capital. Like if you look at $345 a share, you know, we don't have to risk a ton of capital. Instead, what we can do is do option trading and maybe buy a vertical at this spread. And we can get exposed to that stock in a much more cheaper and cost-effective way. And I can risk like $210 to possibly make $290. So if it continues to go up, down here at the bottom, it says right there, you'll be able to see it, $290. So if it goes up and heads higher and then time decay kicks in, this is the way that options work, is that you're able to actually create risk profile pictures that are a little different. You're able to construct, the risk parameters you want and the most you're willing to lose. You could even structure spreads that are, hey, $118 here at a max loss. But if it goes up, you make about $382. So the point being is that it's not about you understanding everything right now at this point in this second of how this works. It's just to show you that you could risk a lot less capital when it comes to option trading. And if the stock powers higher, just like it would with a normal stock, if it heads higher, you go ahead and profit from that. There are some problems as well, like you lose time value with options like theta decay. You have to learn to manage risk. You have to learn to spread out your position. So there's a lot of other things to learn. And the education gap, you got to learn a lot more than you would with just buying a stock. You have to invest in yourself a little bit. But if you're willing to do the work, this is a lot better way to grow a small account than to simply go in and try and buy, shares of like a cheap company for like $7, $8, $10. Now, I'm not saying this doesn't work and, it can't power higher, but unfortunately what's happening is you're waiting, and then waiting for that explosive move. And for some people it works fine, but the issue is you're actually dealing with a lot of companies that are just not great companies to trade with or deal with. And sometimes they pan out and other times you're just kind of dead in the water. So, point being is that if you learn to trade options, you'll be a lot better off. There's a lot of great things out there when it comes to trading options. You can construct even spreads that can make you money from non-directional trading. So like even if the stock doesn't go anywhere, you can go in and go, let's say 305 and 300 on Microsoft here at 190, 195. And now what I'll do is create this spread construction where if the stock doesn't go anywhere, it just kind of hangs out between these two zones, between about 390 and 305 or so. Then what happens is with time, as I move this time forward, this white line, which is today, goes to the expiration line, which is when the options expire. It kind of gets bigger and bigger, inflates like a balloon. And then you could actually take this spread out for maybe a $30 profit, $40. And you might say that's not a lot, but it's on $400 of risk. So you're risking 400 to make like 10, 15% as long as the stock stays in this range. I mean, you got a goalpost. It's not like you need a direction up or down. It's going to just wiggle around in here. And then you could also take it off earlier. So it's a whole different way of trading than what most people are used to. Most people try to grow that small account with trading these cheaper companies and so forth. But unfortunately, what happens is these cheaper companies, let's sort by last here for a minute. These cheaper companies, they don't necessarily pan out very well when you actually look at, hey, how is it, how's it going to move? How's it going to behave? Can you actually get in it? Can you actually get out of it? So like, look at some of these companies. They're just hanging out here from October is pretty much the same price. Now today you got a big move, but a big move in this company is like 14 cents. So really it's much more difficult than what most people think. They try to get into these cheaper companies and cheaper stocks, and unfortunately, it's really a bad approach to growing a small account. So anyway, I hope this helps, gives you a little insight. Definitely encourage you to check out tradingwebinars.co, learn a little bit more about getting started with options. That's the better approach, smarter approach, I think, for growing a small account. But it does take more knowledge and education, but that's what this business is about. You got to know some stuff to be able to be in the business, just like with any business out there. So take the time, learn some stuff, get a little bit better at it, and then learn and grow your account from there. But hitting those cheap garbage companies, oftentimes they're not the high quality breed in the market. I'm not saying they're terrible companies. I'm just saying from a quality basis of the things you could invest in, there's many more better quality companies out there to trade and invest. So anyways, hope that helps. Thanks for joining me, and I will see you in the next video. Take care.